Good afternoon and welcome back to Money Control's live stream. You're tuned into Closing Bell with me, Lovisha, Darad, and joining me my colleague Yatin Motas. Yatin, what a powerful start to the week and a marvelous Monday. In fact, Sensex at 4-month high and even Nifty settled above that 24,300 mark. So the two-day lull that we saw after the terror attacks, investors have kept that beside and markets edged higher in today's trading session. However, advanced decline ratio, that is at 1:1, and definitely one of the star performers today, that was your Reliance Industries, the big boy of Dalal Street. That was a major contributor to the overall positive market momentum too. Other than that, majority of the sectors have participated in the rally, barring the IT index, which saw a little bit of a cool off given that we saw a huge rally last week itself. So yes, Yatin, a good start for the markets. We have set aside the tariff volatility and now the terror attacks and tensions at the line of control too.
Absolutely, and I think when it comes to the stock markets, obviously last week there was panic in the market, probably signaling an escalation between India and Pakistan. A lot of unwinding, especially with the retail as well as HNI investors. But Friday's figures, if you see, against that unwinding, we had the FIs and DIs both buying in Indian equities. But today, clearly on the back of earnings reaction, we had a solid rally in the marketplace. In fact, today Reliance Industries was the top contributor in the marketplace, and obviously whichever numbers which were flowing in, especially from the banking names, saw some positive reaction. However, it was a day of consolidation for the NBFC stocks.
Some of the top gainers on the Nifty 50, that includes the likes of Reliance Industries, which is posting of about 5% gains in today's trading session. Apart from that, reacting well and positively to its Q4 results. We'll discuss more about the stock in detail later in the segment. Apart from that, Pharma extending its gain to the third straight day with about 3% gains in today's trading session. JSW Steel, second day of straight gains with about 2.5% gains. Bharat Electronics, defense stocks have seen a bit of a fervor given that there is geopolitical tensions, which is high in the market sentiment. We are seeing the likes of Bharat Electronics with a gain of about 2% too. On the other hand, if you look at some of the top losers on the Nifty 50, Shriram Finance seeing a cut of about 5% in the past 3 days. The stock has seen off up to 15% cut or so, reacting to its Q4 results, which was lower than what the street was estimating. Apart from that, HCL Tech with about 1.8% downtick. Other than that, we can see Ultratech Cement reacting to its Q4 results with about 1% downtick, and Eternal Zomato shares coming with about 0.7% downtick, given that the Reliance Industries have said that they plan to set up dark stores soon as well. But yes, from the mid-cap and small-cap space, mid-caps definitely outperform the small-caps. Yatin, what are you gathering from this broader end of the markets?
So the broader end of the market, was initially under pressure, but the advanced decline ratio improved at the end of the day to 1:1. RBL Bank, posed the numbers and good guidance for FY26, surged nearly 10% in trade. Obviously, as you mentioned, the defense stocks moved anywhere between 5 to 10%. Sonata Software, Data Patterns, Kochi Shipyard were the other stocks which saw some good buying action. Losing side, Tejas Networks and a very weak fourth quarter post with this Tata Group company fell nearly 13% in trade. SW Solar, RK Forging and Chola Holdings were the other stocks which reacted negatively to news. But clearly BSE is a star performer in trade today, 4% higher for that stock and clearly at a multi-year high. But stealing the limelight was Reliance Industries, one of the top traded counters in NSE's cash segment with over 4,000 crores of turnover. The stock ended the day's high at nearly 5.5% plus. Obviously, with a standard disclaimer that Money Control is owned, by Reliance Industries via the subsidiary holding structure. Take our analysis with a pinch of salt. But talking about Reliance Industries, Jefferies came out with a buy call with a target of 1660. Morgan Stanley is overweight on the counter with a target of 1606, and Macquarie also has a target of 1500. So, the current target is clearly much better or above that current market price, giving some swing to the upside. Now, if you look at the O2C segment, obviously because of the volatility in the crude oil prices, petchem as well as cracks and GRMs got impacted for the fourth quarter. But look at the strong performance of Jio, which is the telecom business as well as the retail business. Talking about Jio, The ARPUs for Reliance Jio came in at nearly 206 rupees, which was much better than the street expectations, number one. Number two, the quality of new customers getting added on Jio network are 5G customers. Remember, they are also planning to add nearly 10 lakh new customers every month for Jio Fiber, which is the broadband business. So tall targets for that particular business. Also, joining the party was the retail business, which saw some good improvement, 15% kind of a growth on the margin front. And if you look at retail, the quick commerce offering has seen a strong jump up, nearly 2.5 times growth versus the last quarter. And if you look at the quick delivery segment, the standard delivery option as well as the quick delivery option have been doing really very well versus the competition in terms of the overall growth. So retail business also growing, but clearly the star performing segment which market is now eyeing for FY26 is the new energy business. The electrolyzer, green hydrogen as well as various clean energy projects are on track according to the management, and moving forward in 2030 the contribution will be as large as the O2C business profit. So the brokerages are now expecting that the new energy business would take off with factories commissioning somewhere in between of FY26 and project running on schedule. So clearly a good all-round set numbers for Reliance in the first quarter, and the outlook also for FY26 improving for key businesses including retail as well as the new energy business.
That's right, Reliance Industries, the big boy of the Lal Street, and of course the first Indian company to have a net worth of in excess of 10 lakh crore rupees. But yes, shifting focus from Reliance to M&M, that also stock gained limelight and surged about 2% in trade today after the company said that they are set to acquire a controlling stake in SML Isuzu. Now they are buying the entire 43.9% stake from the promoter Sumitomo Corporation and another 15% from Isuzu Motors for 555 crore rupees. The company will also launch an open offer of another 26% stake in the company as per SEBI takeover rules. Now, why the deal? The deal will help M&M double its market share in the buses and trucks segment to about expand its market share to about 6%, with plans to push it up to about 12% by FY31, which is your next 5 years or so. Now, what the brokerages have reacted to this deal? Citi has shared a buy call on the counter and has maintained a target price of about 3,680 rupees per share, and they see that this deal as a strong growth move in the CV market, and they believe that this cash outlay from the M&M won't affect its balance sheet too. Morgan Stanley have also shared out a buy call on the counter, and they feel that the deal is quite attractively valued, and they believe that this deal is quite a good move into the LCV segment as it would mean lower emissions and less competition versus the SUVs too. They have shared an overweight rating on the counter and a target price of 3675 rupees per share. On the other hand, Investec have also shared a positive take on the counter, believing that SMLs would expand presence of M&M in an under-penetrated market like this. Yatin, from 3% market share, they're targeting up to 12% in the next 5 years or so. So the king of SUV maker is now shifting its focus to expanding its CV portfolio.
Absolutely, and the trucks and buses segment is obviously a focus area for Mahindra & Mahindra, where it's still lagging behind its peers like Tata Motors as well as Ashok Leyland. I spoke to the management earlier this day, and they were very confident of integrating this facility in North India. Obviously, the trucks and buses segment is something wherein they are looking at a good doubling of market share in the coming financial years. Obviously, the deal takes 6 to 12 months to get completed, but with the state of the art facility with good margins on products what they manufacture in this plant in North India, probably the deal augurs well for Mahindra & Mahindra, especially to do with the fact that they are getting the SML Isuzu business at 650 rupees per share versus the current market price in excess of 1600. Obviously, the SML Isuzu stock fell in trade, but yes, when it comes to the valuations, clearly quite attractive transaction with respect to the Mahindra & Mahindra's value policy.
That's right. But coming to the next stock in focus, that is your Shriram Finance. The stock did not react well. The stock fell as much as 9% today and settled below that 5% as well. And in the past 3 days also, the stock has been sliding about 15% after investors were underwhelmed by its March quarter performance. So the company did report strong headline numbers, but on the credit cost and the margin front, they were the key misses. The miss on the margins was due to the excessive liquidity on the balance sheet, which led to flat flat NII growth as well on a sequential basis, whereas credit costs rose sharply by about 18% on a sequential basis. Now, how did the street react to it? Brokerages largely remained bullish on the counter, but they did downgrade their earnings estimates for Shriram Finance. For instance, Macquarie said that though the management has guided for NIMs to improve in the next financial year, higher liquidity still will continue to cast a shadow on the company's balance sheet. On the other hand, CLSA said that while the NII figures were largely behind their estimates by about 5% or so, the company's strong 15% loan guidance for FY26 remains a key positive. Even HSBC has noted that the earnings could be under pressure for the near term, but on a 2-year CAGR basis, earnings growth and profitability look quite healthy. They've also cut Shriram Finance's EPS estimates by about 4 to 6% for FY26 to 27. Yet in last year, the stock had seen a significant jump of nearly 50%, but this year it has been quite a modest start for Shriram Finance too. And now with this March quarter performance, all eyes will be on how it progresses with the FY26 performance.
Clearly, and I think the EM growth guidance for Shriram Finance was at a modest 15%. And more importantly, in the last 2 trading session itself, post the numbers, the stock has fell nearly 15% plus. So I think it's a consolidation day for most of the NBFCs. Look at L&T Finance, Shriram Finance, Poonawalla Finance. All of these NBFC stocks clearly were under pressure for the trade today. Even Chola, one of the top losing stocks in trade, especially in the F&O segment. So yes, I think NBFCs have disappointed with the fourth quarter results, especially there was high hope or expectation that FY26 would be better, but I think the managements of most NBFCs have kept their targets for FY26 quite conservatively.
Okay, all right. Now let's move on to the defense stocks that were in the favor today, given that the tensions between India and Pakistan is on the rise, and defense stocks did garner investors' attention today. So from the likes of HAL to BDL to Garden Reach, all of them surged between 4 to 8%. Even the Nifty Defense Index that marked the strongest intraday gain since April 15. Now, the rally came as reports of Pakistani army emerged of violating ceasefire along the LOC, and the Indian troops also responded with small arms for the 4th time. In addition, the defense minister has also briefed Prime Minister on the security arrangements after the terror attack, which has claimed the lives of around 26. India also announced several retaliatory measures against Pakistan on a diplomatic level, but a potential military action is something that the investors are closely tracking. Yatin, the interest in defense stocks also comes ahead of India signing a deal for 26 Rafale fighter jets from France. So at a time of geopolitical tensions, defense stocks once again have been on the forefront.
Absolutely, defense stocks clearly in focus on the heightened tensions between the two neighboring countries, India and Pakistan. But Lovisha, another thing apart from the Rafale deal is the meeting of Defense Minister Rajnath Singh with PM Modi later in the evening today. I'm sure there has been a lot of speculation in the media regarding what action will India take, what can happen, a lot of scenario analysis in the marketplace. But I think the government is quite tight-lipped. Instead of speculating as to what happens, I think we'll need to wait and watch as to what response is given by the Indian forces when it comes to countering terrorism. As a country, we are not targeting Pakistan, being clearly made under the statement of PM Modi, but we are targeting, the people who are behind such terrorists, be it, in whatever form. So let's see how the entire geopolitical issue shapes up. But a lot of news reports and a lot of, rumors in the market. So just take every rumor with a pinch of salt, because nobody knows what action will India take in the shorter run.
That's right, something that we need to watch out for too. But all right, with that, we've come to an end of this edition of the Closing Bell. It was a good day for the markets, but then we'll watch out if this holds up for the week too. We have earnings season continuing. Trent, Bajaj Finance, that'll be reporting Q4 results tomorrow, so do watch out for those. But it's a wrap from Yatin and me. Thank you for watching.